To Power Breakfast. I'm Pavitra Parekh. Those were all of the top headlines that we're looking at this morning. And it is once again this global weakness that we're seeing across the markets that is really dominating sentiment. So we did get another weak session from Wall Street. At the S&P 500 as well as Dow Jones have clocked in their third straight day of declines. And on the back of that, you have all of the Asian markets which are in the red, barring just the Taiwanese index, which is up on your screen. So Taiwan is seeing gains of around 0.4%. But for the rest of the Asian markets, it's looking like quite a weak open. Nikkei there leading the losses. It's down around 0.5% right now. The Hong Kong markets on your screen seeing cuts of around 80 points, around 0.4%. And for most of the markets, so whether it's a KOSPI, you have Straits, all of them also opening with some minor red. So that weakness that we're seeing across global markets really continues today as well. Let's also bring the SGX Nifty up for you. And that is indicating that we could have yet another weak start for our own markets. It is currently around 46 points lower on the SGX Nifty. So that's what's happening across the Asian markets. But let's also talk about Wall Street then. Key indices in the US ended Tuesday's trading session lower. So the Dow Jones was down around 0.5%. The S&P 500 closed with cuts of around 0.2%. And the Nasdaq Composite was actually quite flat at the end of the trading session. CNBC's Carl Quintanilla gets us a wrap of all of the action from Wall Street.
The major averages finishing lower on Tuesday after posting their worst day since June. On Monday, the Dow slipped slightly, just under 0.5%. The S&P also fell slightly, down about 0.25%, and the Nasdaq finishing mostly flat today. New home sales fell nearly 13% in July, plunging to a 6.5-year low. It comes as rising mortgage rates and high prices have combined to send the housing market into what many experts are calling a housing recession. Year-on-year sales down nearly 30% last month. Meantime, oil prices climbing more than $3 a barrel on Tuesday after the Saudi oil minister said OPEC may cut oil supply. That's a big move for crude, but it's worth noting the cost of a barrel of oil is down 15% in the past 3 months. That's the action from the U.S. market. Back to you in Mumbai.
All right, Carl, thanks a lot for getting us all of that action from Wall Street. But let's also listen into some important opinion. This comes in from Michael Wilson of Morgan Stanley on the likelihood of a recession in the U.S. Listen in.
I do think that a recession is still, a 50-50 shot. We're not, it's not our base case. We're not in the 80% camp like some others. But definitely the risk is elevated. I think our main point over the last couple of months has been that earnings are going to be at risk either way. It's just magnitude of that risk. And, as we noted, 3,600 sort of priced in that risk of a earnings recession without an economic one. There could be a rally. We never thought we'd get to 4,300, to be honest, but 4,000 was in the cards. That would be a typical range. So I think, look, the markets are doing a really good job of testing everyone. But I still believe we're in the midst of a bear market. I don't think you can say the coast is clear.
All right. Thanks a lot for getting us all of those market sort of the move on Wall Street, and that is some important opinion that we're tracking as well. But let me also bring you some important news from the US. We saw shares of Twitter close sharply lower. In fact, this is after former security chief turned whistleblower on the company, and they have alleged that the company misled users and also flagged off some negligence on apparent cybersecurity policies. So listen in to some special report that we have on this as well.
The whistleblower here is Twitter's former head of security, Peter Zatko. He's a hacker who's known by the nickname Mudge. Zatko says Twitter misled the government about security and spam, violated an FTC settlement, is running out of date software, and withheld key facts about the number of data breaches at the company. The complaint also says the company prioritized user growth over reducing spam, and executives stood to make bonuses for themselves of as much as $10 million tied to increases in daily users, but not to eliminating spam. Mudge was hired at Twitter by Jack Dorsey in late 2020, but he was fired by the company in January of this year. In a statement to CNBC this morning, a Twitter spokesperson said this: Mr. Zatko was fired from his senior executive role at Twitter in January of 2022 for ineffective leadership and poor performance. What we've seen so far is a false narrative about Twitter and our privacy and data security practices that is riddled with inconsistencies and inaccuracies and lacks important context. Mr. Zatko's allegations and opportunistic timing appear designed to capture attention and inflict harm on Twitter, its customers, and its shareholders.
All right, Iman, thanks a lot for getting us all of that action on Twitter. And it is on the back of these allegations of cybersecurity negligence that we saw the stock tank over 7.5%. So that's something that we're tracking from Wall Street. But staying with the global markets, let's also talk about Europe now. They ended Tuesday's trading session lower. So the German DAX index saw cuts of around 36 points. The British FTSE was down 45 points. And the French CAC index also closed with cuts around 16 points lower at the end of the trading session. In fact, investors in Europe digested the August PMI, that is Purchasing Managers Index readings, which showed that business activity contracted for a second straight month in the Eurozone region. So that is something else that you should keep in mind as far as the global markets go as well. But sticking with that, as Ukraine marks its Independence Day today, it is a somber moment for the battle-torn country as the day coincides with 6 months of the Russian invasion, and officials have banned public gatherings in the capital city of Kyiv. A 2-day curfew began in the city of Kharkiv as fears grew that Russia might attack on the anniversary as well. Separately, U.S. is expected to unveil a new $3 billion assistance package. The funds come from the Ukraine Security Assistance Initiative approved by the U.S. Congress. CNBC's Sylvia Amaro is telling us how badly this war has hurt Europe and actually how badly it's hurt even Russia itself.
Let me show you a couple of bullet points, really. And I would like to start with the gas storage levels. This is one very important one to keep monitoring over the coming months. At the moment, you can see that Europe as a whole has a storage level higher than 75%. And that means they're actually on track to achieve the 80% target by the end of October. One analyst that I spoke with yesterday did say that these are good levels, but it will be important to see where they're at the end of the winter, because overall the EU does not want to run out completely out of these gas levels. So let's wait and see what's going to happen on that front. But of course, these are good levels, but they're coming at a hefty price. If you look at the gas prices in Europe, they're up by more than 100% since the invasion began. And further disruptions, particularly if Russia decides to close Nord Stream 1 completely, could add up to these gas price levels even more. So this is also an important one to keep monitoring. And speaking of Russia, let me show you where the economy is at the moment. According to the IMF, they're expecting a contraction of about 6% this year, but they expect the Russian economy to recover in 2023 and only see a contraction of about 3.5%. And now if you look at the stock market, though, that's up by about 7% since the invasion began, really highlighting that when it comes to the stock market, that's actually recovered since that critical day for Europe, for Ukraine, and the world as a whole as well.
Hey guys, welcome back. You're still tuned into Power Breakfast. Now, we've already gone through the global market, so let's take you through everything that you should track as far as our own markets are concerned and all of the cues that you should keep in mind. We have Sonia and Mangalam joining us now to take us through the trade setup and all of the individual stocks also which could be in the news today. So Sonia, let me come across to you first. We were just going through the global market setup, and once again that weakness really persists.
Oh, absolutely. And it's been 3 straight days now that the US markets have been under pressure. And I reckon that could drag our own markets down as well. So the Dow was down about 150 odd points. 3rd day in a row, the S&P 500 under pressure. Crude prices have gone back up. So Brent is now almost at $100 a barrel, as there are talks that Saudi Arabia could go ahead for an output cut. All eyes will, of course, be on the 3-day Jackson Hole Symposium that starts tomorrow. And you do have Fed Chair Jerome Powell speaking on Friday. Fed watchers are expecting him to reinforce the battle on inflation, so all eyes will be on that. For our own markets, FIs bought in the cash markets yesterday, bought about 563 crores, while DII sold. The buy on dips is something that does continue. So yesterday as well, the Nifty recovered from the lows of trade. It recovered sharply to close above the 17,570 levels. And for trade today, I'm also watching out for the 20 DMA, which is around 17,380. That seems to be the support as of now. Global macros will definitely weigh in on the sentiment, though, so I'm expecting the start to be in the red.
All right, start in the red, so let's see how we go from there. But Sonia, stay on. Also take us through all of the stocks that we should watch out for. Of course, we did have that big news of Adani buying in 20TV.
That really is going to dominate Mindspace today, right? So NDTV, the stock is at a phenomenal run, perhaps in anticipation of this deal. Adani Group's media arm has bought a little over 29% stake in NDTV and launched an open offer for another 26% stake, so that will definitely be in focus. Chennai Petro, the board has approved a JV with IOC and seed equity investors to implement a 9 MMTPA refinery project for 31,580 crores. So I'm watching that stock closely. Arvind Smart Spaces has announced signing of an agreement with HDFC Capital Affordable Real Estate Fund for the creation of a residential development platform with a revenue potential of up to 5,000 crores. And Confidence Petroleum, there's a board meet on the 27th of August for fundraising. So I'm watching that stock closely as well.
All right, Sonia, thanks a lot for taking us through that entire list. We're going to keep all of these stocks on our radar. Finally, let me also bring Mangalam in, who's looking at all of the cues from the futures and options space. Mangalam, it was quite a shaky session. We did manage to close in the green, but take us through everything we should track.
We did well in yesterday's trading session from the lows. In particular, we broke the two-day losing streak. But let's see where we go from here, because the SGX Nifty is lower as we start to kick things off, down almost 50 odd points. Importantly, yesterday the bounce on the Nifty came from the 20-day moving average. The low on the Nifty was 17,345. Yesterday's 20-day moving average was 17,340. So we saw support there, and that was also led by the Nifty Bank, where we saw the Nifty Bank, fall just about 100 points away from its 20-day moving average and recover swiftly from there. The big factor for that was, apart from technical bounce, the FIIs bought into the cash market. Almost 600 odd crores out there, notwithstanding the DII selling of 215 odd crores. This is the expiry week, and the FIIs are, more or less lightening their positions as far as the longs are concerned. They unwound about 250 longs, or added about 1,000 shots. Not too much in terms of absolute numbers, but what it has done is it has made the FIIs net short in the expiry week at 51% versus 49% long exposure. In options, they're buying more puts than calls, so they're preparing themselves for any downside that would happen, just the way the SGX Nifty is indicating. But at the same time, they've also sold more calls than puts, they've sold more puts than calls. And that's telling you that lower levels, namely the 20-day moving average, would be an important support to watch out for. Yesterday, the call writers of 17,500 did unwind their positions. So let's see if we recover from today's low, what happens. And importantly, the 17,500 and 17,400 puts have been extremely active on the short side. So that's telling you that, there would be a strong support around that 17,380 to 17,400 mark, which is the 20-day moving average on the Nifty. The one stock I'll be watching out for is Tata Chemicals. Usually shows violent moves as soon as it enters or exits ban, and now it has exited an F&O ban.
Welcome back. You're still tuned into Power Breakfast. Now, the big corporate news flow that came through last night was that Adani Group has indirectly acquired more than 29% stake in news broadcaster NDTV. The Adani Group's unit has also announced an open offer for an additional 26% stake at 294 rupees per share. Now, this open offer will cost Adani 493 crore rupees. Yash is here with all of the details. Yash, take us through how this deal is really structured and what lies ahead.
Well, Pavitra, let me first start by talking about the shareholding pattern of NDTV itself. So as far as the shareholding pattern is concerned, promoters Pranoy Roy and Radhika Roy hold a little over 32%. Another promoter entity called RRPR, that holds slightly over 29% in NDTV. Now, this 29% stake of RRPR is what is in question and comes in the center of this transaction. That 29% stake of RRPR in NDTV has been acquired by this entity called Vishwa Pradhan Commercial, a wholly owned subsidiary of the Adani Group. Interestingly, the announcement to acquire Vishwa Pradhan Commercial by Adani Group also came minutes before the announcement of acquiring RRPR stake in NDTV. Now, as far as the deal structure is concerned, Vishwa Pradhan Commercial has converted its warrants which it had in into RRPR stake against a loan which it had given to RRPR into equity shares. Now, what that does is that gives Vishwa Pradhan Commercial a 29% stake, which is the entire stake of RRPR in NDTV. And since Vishwa Pradhan Commercial is a subsidiary of the Adani Group, that is an indirect holding of the Adani Group into NDTV. As far as this particular transaction is concerned, after this, Adani Group has said that they will be launching an open offer for another 26% stake at the cost of about 294 rupees per share, which is a 20% discount to what was yesterday's closing price on NDTV. Importantly, comments have come from Sanjay Pugalia also, who's the CEO of Adani Media Networks, which will be directly holding the stake. He says that it is a significant milestone in the company's journey to pave path for a new age media across platforms. Importantly, what lies ahead as far as this particular transaction is concerned, and for Pranoy Roy and Radhika Roy, which is the promoter entity, one is if they feel this is a hostile takeover, they can take a legal recourse. Second, they can tender shares in this open offer to Adani and exit the company. And the third one is co-promote NDTV with the Adani Group.
All right, Yash, thanks a lot for explaining this entire deal structure to us and taking us through all of the details. Of course, remember, NDTV has seen a massive run-up. The stock price is up over 200% this year alone, perhaps in anticipation of this deal. But let's move on and bring you another important story. Almost 8 months after the Vodafone Idea board approved converting dues on account of AGR payment and interest to government equity, the conversion is yet to take place. Sources now tell us that even though the Finance Ministry has given a go-ahead, a final nod is awaited from the market regulator. Ashmit Kumar is here with more details on this one. Ashmit.
The government had pitched the telecom relief package introduced last year as a catalyst for turning distressed telecom sector into a sunrise space. Now, while the industry has showered praise, one key component of that relief package is yet to take effect, even as we near nearly 12 months since that cabinet nod. Now, that key component has been the scheme allowing telcos to convert interest on deferred spectrum payments and AGR dues into government equity. Now, Vodafone Idea opted for the same scheme on January 11th of this year, 2022. Now, the net present value of interest dues would add up to a little over 16,000 crores. However, nearly 8 months post Vodafone Idea's decision, government is yet to convert outstanding dues into equity. Now, this equity conversion would turn the government into the telecom company's single largest shareholder as of Jan 2022. That would translate into a holding of 35.8%, which is higher than either of the two remaining promoter groups. Now, this was anticipated to be a long-drawn process. Any such conversion would require the nod from the Finance Ministry. Vodafone Idea is listed, so it would also require the SEBI nod and finally the approval from the DOT. Now, in March, Vodafone Idea had pleaded before the government to fast-track the conversion process. The company had claimed that it's in talks with various funds for raising funds, in fact, and that equity conversion would help in mobilizing them. Now, at the time, the company was seeking to raise as much as 20,000 crores from promoter groups and external investors. Now, with little movement in April or May, government sources revealed in the month of June that the equity conversion may be completed ahead of the 5G auctions. Now, we had learned at that time that due diligence had almost been completed and that SEBI's final approval is awaited. Now, in July, Finance Ministry granted its nod, pointing at a possible conversion prior to the 5G auctions, but the auctions began as scheduled on July 26th, with still no movement. Now, while the auctions were underway, the telecom minister revealed that technical issues had come in the way and that conversion will take more time. So, are there concerns that the government has on its mind? Well, the company has admittedly struggled to raise funds for its operations from either external investors or the promoter groups. The telecom's customer base has also been bleeding, has been eroding, with lakhs porting out almost every month. And these concerns are taking a toll on the company's finances with mounting losses. Now, speaking of the subscriber base, the first half of 2022 alone has seen the company lose over 88 lakh subscribers. The 12-month period ending with the month of June 30th of this year saw Vodafone Idea lose as many as 1.66 crore customers. And for the 15-month period beginning 1st of April 2021, the company saw over 2.7 crore customers porting out. In fact, the last time the company added subscribers was way back in March of 2021. Now, expectedly, the financials are nothing to write home about. Since the merger, the cumulative losses are pegged at 1.68 lakh crore rupees. The subscriber base has fallen from 422 million to 240 million. That's down by 43%. Meanwhile, the total debt has crept up to nearly 2 lakh crores. Now, the effects of this was visible in the recently concluded 5G auctions. Vodafone Idea's total bid of about 18,800 crore rupees looked bleak against Airtel's bid of 43,000 crores and Jio's bid of 88,000 crores. Now, the nearly 8-month delay in government action is at odds with the recent pace that has been shown by the DOT in execution of spectrum auctions and the fast pace of assigning spectrum to the telecom companies. Now, while the government leaders continue to cite issues, no clarity has emerged on the nature of such issues and the possible timeline for execution.
All right, Ashma, thanks a lot for getting us all of the details on that. With that, we're out of time on this edition of Power Breakfast. Thank you very much for tuning in. Bazaar Morning Call comes up next.